So we're here on Discord recording today's session. Going to be talking about the trade plans that we host and offer on the Rawstocks Discord. We produce these every single week. Or try to. There's right now currently 20 tickers that we're doing. Always open to new suggestions for other tickers. Sometimes I know we've been asked to cover Hood, and there was one other one last week that somebody asked. So might be looking to rearrange some of the tickers that we offer. But yeah, right now we got I think 20 of them, a mix of indexes, pretty tech heavy, some crypto sympathetic stocks as well. So today I'm going to cover the Tesla trade plan because this is the one I offer every week for free. I offer it to the Tesla free chat in our Discord. I offer it to on X or on Twitter. To the community over there. So I always just kind of give one for free. Tesla's that's the stock that we built this Discord on originally. And so that's the one that I cover the most. And so that's the trade plan that I give for free. So what I did is I got my TradingView up here. And like I said, today I'm going to show you basically just how to set your chart up to be ready for these trade plans. And what's nice about the trade plans is one, they're backed by data, right? So we have Gamma Edge is our preferred and our partner options data provider. So these are all using Gamma Edge data as I analyzed it, and we give the bullish and bearish setup. So you're prepared for both directions. So it's a non-biased trade plan, right? So we're ready for whichever trigger to hit, and we have 3 take profits and we have a stop loss. So again, basically what I'm going to do is just show you how to easily set these charts up. Again, maybe you just trade your favorite ticker or a couple tickers, or you can go, if you're a premium member on our Discord, you can have access to all 20 of those tickers. We're going to set up alerts. We're going to set up the levels so that we potentially don't miss the trades. So what I did here is I just took a screenshot of the actual trade plan alert that comes from our Discord, or that'll be posted in X, or posted on the Tesla chat channel of the Discord for the free users. Just took a screenshot and I copied and pasted it onto my TradingView chart. So that's a nice function of TradingView, is that you can just copy and paste pictures or screenshots or different things right on top of your chart. So I don't have to keep jumping back and forth to the trade plan. It's right here. So it'll make it nice and easy for these levels. So the first thing I do is I'm just going to make sure we're on the right ticker. We're on Tesla here. You can do whatever time frame you want. I'm on the 5-minute. It just makes it easy to actually see some of the price action. When you get up to the higher time frames, sometimes that the price action is squished or those levels are too close. So I want to at least be on a lower time frame. 3, 5, or 15-minute is good for setting up your plans. Okay, next thing we're going to do is we're just going to go down the list, right? So we'll start with the bearish setup. We're going to see the trigger is losing 437.50. So what I'm going to do in TradingView is I'm going to go to the trend line tool, the lines, and I'm going to grab my horizontal line. Okay, and then I'm going to come over here and I'm going to look for 437.50. So it can be, close enough, because what we'll do is we can double click or double tap if you're on mobile, open up the details of that line itself, and we can change the coordinates and the color. So I'm going to label this what it is. It is the bear trigger. And I'm going to make that, actually I'm going to make the text in white. And then I always do the triggers in the color of the direction that we're looking for. So the bear trigger is going to be red. And I like to keep the title white so I can see it. It's nice and bold. If I turn it red, it blends in with the lines a little bit too much, I think. So I like it to be white, but the line itself will be red. So that's going to very clearly show me, when we get to it, that this is a bearish trigger. Whether it says bear trigger or not, I know. Okay, the coordinates, we're going to go in and just make sure they're perfect. So 437.50. So we can just enter those in right there and it'll pop up. What's up, Assassin? You're just jumping in. We're really just getting started after I did some introduction. So thanks for joining us. We're just starting to put the levels on. I was saying I screenshot the trade plan. I put it right onto the chart so I can really easily see it. And then where we're at right here is just starting with the bearish setup. So the first thing I do, I grab a horizontal line, put it right where the bear trigger is at 437.50, and I labeled that bear trigger. So next we're going to go to the profit or the take profit levels. So you can see we got 435, 432, and then 430. With these trade plans, it tells you why those levels are key levels and our take profit levels. So on the bearish setup here, we have a put dominated strike. We also have a put wall at 435. Okay, at 432, we have the cumulative out of the money puts, and we have a high put OI, and we have a GEX reversal zone. Okay, and then if we were to clear that and go to 430, we have a large delta unload around 430, and we also have a liquidity shelf. Again, these are all based on Gamma Edge options data numbers. So I'm going to go ahead and put these levels on the chart, 435, 432, and 430. I'll do the same thing, but I'm just going to color them different. I'll grab horizontal line, and I don't really care where I put them because I'm just going to open the coordinates by double clicking or double tapping, and I'm going to type in those coordinates directly. And then I'm going to make these white because I want to differentiate them from the trigger itself. Okay. So you can keep grabbing these, or if you're on a computer, you can hold control and click on the line itself, and you can just drag 2 more lines down. If you're on mobile, you got to go back to the tool, grab the horizontal line again, and then tap on your screen wherever you want it. Now we'll double click those or double tap those, open them back up, and we're going to put our levels on precise, the precise spots. So we got 432, and then we got 430. Okay, so now we have our bear scenario laid out right there. Next, we're going to move over to the bull scenario, and then we will put the stop loss in. Okay, for both directions. But the reason I do the stop losses at the end is because you can see that the stop loss here for the bear setup is actually our trigger point for the bull setup. So I don't want to go put a level stop loss in there and then have to change it after I've already put my bull trigger in. So now we're going to start with the bullish setup. I'm going to again go grab the horizontal line. I'm going to throw it on the chart. I'm going to make it green because this is a trigger. I'm going to type in bull trigger so I know exactly what it is. Again, I'm coloring it white so it clearly stands out from the line itself. And then the coordinates for that is going to be 442. Now again, I said this was the stop loss level as well. So then I'm going to also label that bear stop. Okay, so now I got my bull trigger bear stop at the same level. So if I know that the bear trigger hits and then we never hit take profit, okay, I know that my bear stop is also up here. That's if you do let the trade play out. Now if we hit that bear trigger and we drop down, we didn't quite hit target, I really would consider adjusting that stop loss back up to the trigger so you don't take any loss on that trade. But if you want to let it play out and see if we, bounced, came back up, and then ran at the target, you could leave your stop loss up here. Essentially, it's a 1-to-1 RVR because you can see. It's basically it's like $1.50 move down, and it's it's a little bit deeper than a 1-to-1, but it's a little bit more than $2 on the move up. I try to keep these closer to 1-to-1 on QQQ, SPY, SPX. They all should be 1-to-1 minimum, but on Tesla it's a little bit different. So we got our bull trigger, we got our bear stop. We're going to go ahead and put in our 3 take profits, and then we'll put in our stop loss for our bull case as well. So we're doing 445. That's a minor gamma resistance and a call stack. We got 450, a dealer absorption zone, 450-250, a major gamma spike, and a high net call OI. So we'll grab again. I'm just going to grab these white lines here, or you can go back up to the tool and grab your horizontal level. And I'm just going to throw 3 out there, and then I'll adjust them accordingly. So our coordinates for that are going to be 445. And the next level will be 450. And you may notice that these are all pretty clearly round numbers or on the 50 cents, and that's because they're based on options data, so they're based on strikes, right? So they're not going to have these weird decimal points like 437.23 because there's no strike there. There's strikes at every $5 and on the in-betweens at the 250s. So that's why we have like 37.50, 35, 32, 30, right? 42, 45, 50, and here's a 52.50. So they're all going to be those every like $2.50, potentially a level. So we got 450 there, then we got 450, 250. Okay, and then you can see our stop loss 437.50 is the same as our trigger for our bearish setup. So we're going to go back to this one, 437.50. It's our bear trigger and our bull stop. So basically in this week's example, and it's not always going to be this way, but on this week's example, our triggers are the same as our stop losses for the opposite direction of the trade. So bull stop is our bear trigger, bear stop is our bull trigger. It doesn't always work out that way, but sometimes it does. So ultimately, if you're getting stopped out, you'd be entering into a call on that one. Down here, if you got stopped out on the bull trade, you'd be entering into a put to ride back down. Ultimately, you'd be kind of looking to like make up your loss in that instance if you're going to flip. Now, for those of us who trade like futures, if you use these same levels, but then are trading like NASDAQ, you literally can hit like the reverse trade button, which is kind of nice versus options. You can't do that. So that is essentially how we're setting up our levels. Now, the next step is I can just remove this because I don't need to see this anymore. Our next step is to set up the alerts, and then we're going to analyze our levels based on the data that or the indicators that we have as well, just to see if anything else lines up or it gives us any additional confluence. So what I'm going to do is I'm going to go over here, and at 442, I'm going to set an alert. So if you're using TradingView, all you got to do is go over to the little plus button that's right as you hover. If you're using a PC, hover right next to the price line. You can hit the plus button, and I can hit alert on Tesla at 442. Okay, so now when price hits that, it's going to give me alert. If you're on mobile, I think you long press or double press on the price bar itself on the y-axis, and then it'll also allow you to set an alert, I believe. So I'm going to do the same thing with our bear, 347.50, 51, close enough. I'm going to set an alert there. So now I got two alerts, right? If price crosses over, doesn't matter what time frame, it's literally when price hits that price level, I'm going to get an alert on my phone. So if I'm at work or I'm doing something on the Discord, and we hit that price, I'm going to get alerted. It's nice if you have a PC because it'll come up as an alert like on your screen. If you're using mobile, it's going to ding or come to an alert like through a notification. But I will get alerted to price crossing either of those. Right? And then I don't really care as much, but you also can set the alerts on the take profits if you like. But I know if I get alerted to the bull or the bear trigger, I'm going to probably be watching the trade, so I don't necessarily need alerts to be set. But if you're busy, and you take trades and you're not there to monitor them all the time, you definitely can set just the same way we set these alerts. You can set these alerts on your different TP levels. Okay, and then you could look to exit on those levels when they hit, and you could get alerted so you don't necessarily have to sit there and babysit the trade all day long. Also, if you wear smartwatches, a lot of times you can set up your notifications to come through your smartwatch so you can be alerted on your wrist before you even have a chance to check your phone. So something to consider, using that technology in our favor. I love it. Sometimes I do get those kind of alerts on my watch, and then it just prompts me to go check the computer, check the phone. Last thing we want to do with the trade plan is we do want to look at our VWAP, right? Our VWAP is kind of our confirmation indicator, or build some confluence. in what's going on. So we're on the 5-minute chart. It's going to show the same because VWAP is static. It's going to show the same price of VWAP no matter what time frame you're on. So we can pull out to the 15. You can stay on the 5 if you want. Here's post-market data on Friday as far as price goes. But you can see we popped over weekly VWAP. Now, when the new week starts, that VWAP is going to pop up to whatever price is, right? But the nice thing that we can see is that in the end of the week, we pop back over weekly VWAP and we pop back over daily VWAP. So as the day starts on Monday and we're watching price, right? We want to watch, are we above weekly VWAP, which we will be because until Monday's over, we don't have a good indicator of what weekly VWAP is. But are we above the daily VWAP, which is the white line here? If we are, and we're above bull trigger, we can continue to say that price will remain bullish until we're below VWAP, right? And so if say we cross this trigger and we're still above VWAP, and we run it at TP1, if we're still above VWAP, we can let that run to TP2 if we want. Right? And we can use VWAP as the new stop or the new trigger to exit the trade. If you want to kind of adjust on the fly, if you will, because these levels are good for our trade plans to begin, and they're still good like throughout the week if you want to use the stops, but also as price develops, we can use those VWAPs as new triggers to, like I said, exit the trade potentially, especially if that trigger, like say VWAP pops above, like we'll take an example here, okay? Let's say price pushes up over the trigger like this, right, and comes back down and is pushing up above TP1, and we're like, I don't know, should we exit the trade or not, right? It's starting to fall. Maybe it catches here. And then what we have is we have potentially VWAP, right, coming up, something like that. Who knows? You know what I mean? This is as good as I can draw it on the chart. But let's say we start to fade, but we haven't come all the way back to bull stop, and we kind of like run this way. Maybe some side action. We're still above the trigger. We're in profit, right? But we're above VWAP still. We can stay in that trade as long as we stay above VWAP and see if we can run it to the next TP, right? Because then if VWAP continues to hold, then we can still use VWAP as that continued indicator. And if we are running on the TPs, we can wait for VWAP to come, if we get up there, we can wait for price to come back down below VWAP in order to exit, or we can just exit on the TPs. So just different ways you can use VWAP, right, as an indicator, because sometimes when we're well above where we might stop out, or we're questioning whether we should leave it to run to the next take profit level, that's always a hard question. Do I take the easy profit? Do I let it run a little bit further? We can use things like VWAP as the indicator. And then we can look at RSI, but RSI was pretty much overbought into close, as we saw that nice run up from the oversold to overbought on Friday. So we can watch to see what VWAP shows us into tomorrow. But I just use it kind of as like a secondary measurement. So that's the trade plan. Is there any questions from you guys on any of the trade plan stuff, how to set it up, understanding it more, how to use any of the tools within TradingView for being prepared for the trade plan?
I have one. So the bear or the bull trigger, does that come from the positive side of Gen X or something, or the negative Gen X, or is it more of like support resistance?
So it's not. It's going to be based on gamma edge data. You can see it's not. If you look at price itself, you can see that the bull trigger is not exactly at resistance or any specific support level, right? And also, if you look at like the take profit levels, it's not at any major support levels. So these are all based on gamma edge data. A lot of times the triggers will be like the first closest major area to price. So if I was to actually, let me see, if I was to actually pull up like the web app, or the gamma edge moneyness command on the gamma edge server, and I was to look at the web app and I was to say, okay, where is spot price? Okay, spot price is at 440. So our trigger is at 442. So I'm gonna look on the gamma edge chart on the screenshot, and this is how I analyze these. I'm gonna say, what is the first the first target that's going to be anything major on the gamma edge chart. So when I'm looking at it, and I'll take a screenshot here and post it on the chart so you guys can actually see what I'm looking at. Okay, can you guys see the gamma edge chart here? Okay, so we're at spot price here for 440, right? And so I'm going to look at what are the major targets on here, right? So I see 450, I see 430, right? Those are our gamma high, our plus gamma high and our negative gamma high, and that's where these levels are right here, right? 450, 430. On Tesla specifically, not everyone's going to be this way because you got to analyze each different web app chart or set of data. You got to analyze it a little bit differently. It's not all going to be stacked this way. But for Tesla specifically, I'm saying, okay, if we're here, right, the first triggers are going to be the next strikes up or down in this situation, because we're going to be trying to make a run at 450 or we're going to be trying to make a drop at 430. Okay, so from 437, which is the bear trigger right here, right, that'd be if we started to fall, we do have 435, 432, so 435, 432, right? And then ultimately, I don't think price is going to fall below 430 because that would be the negative gamma high, and we're in a call dominated environment. So I would expect 430 to hold the support. So there's our first three triggers, right? These first three strikes. Now, again, on Tesla, our first trigger is going to be just moving above this first strike where we can see some acceleration towards 450. Right, so here's our trigger, 442, which is that first strike, 442. It should be, I don't know, it's not set on 442.50, but we'll call it 442. And then we only have two strikes in between that, 445, right? And then we have the 447.50, but because 450 comes in at such a high delta and gamma level, we're going to skip that 447. We're going to probably say, like, if we start pushing through there, we're going to rapidly accelerate to 450. Right? There's not a lot of resistance here. That's a really low negative delta level. That should be cleaned out real quickly. And so if we push through 442.50, we should see acceleration to 445 or 450. Right, and then the next one up here is just the 452.50. There's not a lot above here as far as you can see this like 13,000 net gex level. There's no real significant net gamma above that. So what you're going to do is you're going to experience the gamma curve, which is basically dealers being able to reduce their positions when there's no higher strikes gamma building in any significant way. So they can, when they have to hedge on the way up to a position, once they cross that gamma curve, they start to be able to unwind their position because their risk is the delta is, the gamma is not causing the delta to accelerate any higher because the delta has already got to 1, and so it can't go higher than 1. So what happens is dealers get to start reducing their exposure to those hedges because they're not having to buy any strikes higher if we're not seeing data change for those positions. Does that make sense?
Yeah, a little bit. I guess time will get us better acquainted.
Yeah, I mean, it really, again, like when you're looking at these numbers, it can be really confusing just to look at numbers and be like, what exactly does that mean? Why, why is it significant? Why isn't it? And really, like, it takes a pretty decent understanding of what gamma really is, how that affects delta, what dealers have to do when delta when we're like when we're below a strike and delta's high, or if we're above it, different things like that. So all of those things play a factor in determining these levels. But as far as Tesla goes and this chart specifically, so back to your original question, the triggers are just for this scenario are just the first two strikes up or down. But if we can look at another one real quick too. Yeah, go ahead.
Yeah, I was gonna say, yeah, it's just like how there's the gamma wall. If it crosses that, that means it's pretty bullish. Like I can see where the trigger.
Right. Yeah. And like, that's why there's a lot more separation between this first take profit here and the trigger up here, because we're in a call dominant and 450 is the gamma high, versus you can see like the distance between these triggers or these take profits is a lot smaller than this distance here. So that's going to be the bigger impact, is like, the triggers are about the same distance from spot price, but it's our take profit levels that are significantly different. And we should see higher acceleration because we're in a call dominant environment, right? And we have such a high positive gamma and positive delta level. So dealers, as we push up and get closer to that strike, dealers are having to add to their position on the way up in order to stay delta neutral until we get to 450, and then dealers can unwind. However, that does change if you start to see like the 452 or the 455 or the 457.50. If you start to see like a lot of delta stacking there, or you see the gamma levels changing, then that can change the not the trade plan, but that can change just kind of our bias towards moving higher than 450 and then breaking through that or not. Let's take a look at one more, because it could definitely change, or just give you some more insight onto like how some of these trade plans are set up. So we'll do like an index one this time, because it'll look a lot different than Tesla's will. So I'm gonna hop onto the 5-minute chart. Let me go grab the QQQ trade plan off of the server. All right, so here's our QQQ trade plan. Again, this is all hosted on the Rawstocks server for premium members. So we have our bearish setup here, losing 595. And then we have our take profits of 592, 590, 588 with a stop at 598. Now, sometimes I'll adjust these after I've made the plan, depending on what I see on the chart when I actually set it up. But I will announce that if that's the case. Our bull setup here, 598 is the trigger. Take profit at 600, 601, 604. Again, the rationale is listed. Gamma shelf, dealer interest, high call OI, positive GEX buildup, early net call wall, minor GEX spike at 605 with our stop loss at 595. So that's going to be the same as our bear trigger. So let's take a look at what that looks like on the chart. We'll start with our bear setup. So 595 would be here. Again, I'm going to double tap. I'm going to change this to red so I know that it's a bear trigger. Type in bear trigger. And then it looks like our stop loss for our bullish trade is the same. So bull stop, and that's going to be 595. And then 592, 590, and 588. So we'll find 592. Gonna make that one white. 592. And then what do we got? 590, 588. 590. Okay. and 588. Now with QQQ, unlike Tesla, I will go look at kind of where those levels interact with price. So because they're 0 day, I want to see, like, is there a high or a low right around that area? Because I might slightly adjust those so that they aren't right on those strikes. Okay, and so what I see is this drop to, our bear trigger here. Will bring us down to 592, right? And what I want to look at is I see a lot of candle closes right around that level. Okay, so I'm going to actually adjust that up just a little bit, and I'm going to put a second level in there down with these equal lows on these wicks here. Okay, so if I was going to be trading like a lot of 5, I might take the first bid of contracts off here, and then see if we get like that extra 50-cent drop to here. Okay, so, and I'm looking at these 3 candle closes here. There's also 2 equal kind of candle closes here, but I like these equal low wicks here. So I think that price would drop through that, but we could see rejection because there is a lot of support right at this 592.17. So I don't want to be waiting for this drop and not get some profit in right here. Okay, so some of these can be adjusted slightly based on what your chart, what your actual price is on the chart, because again, these trade plans are strictly based on gamma data without actually looking at price and candles themselves. So depending on your skill level, you might go in there and tweak it just a little bit. Right now, 590 is right here. Okay, and I see low here and I see low here. Okay, so I might leave that there and see, because that's an order block. Right? Or I might just adjust these up slightly to be here, right? And to be here. So to try to capture these 2 lows, which we could break down below. But that would give us a nice drop, and that gives us just an extra take profit in there. So I could adjust this one a little bit lower based on the fact that I put in a 4th profit target right here. So we're locking in more on this and then seeing if we get that big drop down into these lows, right? And then these lows are closer, so we would have a third take profit, 4th take profit right there. So we can adjust them a little bit, like I said, but if you also just want to follow the trade plan exactly as it's listed out, the trade plans continue to hit every single week. So I'm not too worried about making too many adjustments if you don't feel comfortable to do so. So let me put the trade plan back on here. Now we're going to do the bull case. I'm going to double click. I'm going to turn that green. And we'll say bull trigger. I think that's the same as the bear stop. 598, 598. Yep. All right, now we're going to put the bull levels in 600, 601, 604. Always make the levels white for the actual targets themselves, just to differentiate from the triggers. So we'll go 600, 601, and then 604 if it gets moving. All right, so then again, I'm going to just take a look at price and see, what's around there. I do like that 600. You can see there is resistance right here up at 600. So I do like that. You can also see there's some consolidation up here in the 601, right? So we could extend that out just a little bit to capture these tops, but I'm okay with 601 there. And then looking at 604, that's a move above 603. That'd be an actual breakout. We might extend higher than that, but I'm going to go ahead and slap another level in here to capture these. I'm going to put it in a little bit lower. I'm going to put it right here to kind of capture these highs, but also capture these rejection points at like 602.60 is what I really like here. Okay, so again, just making a little bit of adjustments to the plan to get some extra take profit levels in there, and those are more related to looking at price itself as opposed to just the gamma data. But again, very confident in the gamma edge data. It continues to hit on the trade plan. So again, if you're not comfortable making the adjustments, just follow the trade plan. They work very well. Any other questions on like this one specifically with the QQQ and how we made some adjustments? Anything like that?
Don't make sense. Like just copy kind of like follow the trade, just mark them on the chart, and then add the triggers for the alerts.
Yep.
Based on that.
Absolutely. And like I was saying, I don't know if you were in here when I was talking about it right in the beginning, but there's 20 different tickers, so that's a lot of different trade plans that we can be prepped for. If you have any suggestions on any that we add, we're also looking at adding hood. And possibly there was one other one somebody was asking about. So we're open to changing those tickers if there's other tickers that people are trading more often than what we offer. I'm happy to make adjustments. Last thing I'll do is just remind you how to, or the viewers for the ones watching this recorded, how to set the alert, right? Again, over here on the price bar, you just click on the little plus or long press or double tap, I think on the mobile version, hit add alert. Right, and we can do that for our bull and our bear triggers, so we get alerted on our phones or on our watches or on our computers as soon as price hits that. One last reminder too. I try to update all 20 of these on Sundays so that we're ready for the week, but only frequently update Tesla, QQQ, SPY, and SPX throughout the rest of the week. So for the premium members in the Discord, if you want a treatment plan update and it's not provided, please feel free to ask, because I'm happy to update those specifically by request. It just takes a lot of time to run these for every ticker every single day. And so generally the trade plans are good for the whole week. There's not usually so much significant options data changes that it's still not good until after one of the triggers and plans plays out. But if anybody does want trade plan updates, the new trade plans will be, brand new data. So it's going to have all new trigger levels. It's going to have all new take profit levels. So if we got in trades, we got out of trades, sometimes it's nice to have an updated trade plan so you can prepare for the next day or be ready for another trade.
Thanks.
Yeah, for sure. Thanks for attending. If you got any questions, just hit me up in the chat. For anybody watching this on YouTube, drop a comment. If you got any questions, I'd be happy to answer them. We'll see you guys on the next one.